Brian, Praveen just confirmed that he can hear me. Can you confirm the same? Okay, everybody. Good evening. Thanks for coming out here. Brian, can you confirm if you can hear me? Can you hear me now, Brian? Praveen, you can hear me, right? Yeah, okay. So I think Praveen is good. Brian, if you can confirm that you can hear me, we can start. Can you hear me, Brian? Okay then. So thanks for coming out here, and we'll start the webinar. I guess Brian should be able to hear me anytime soon now. Praveen is able to hear me, so we are good to go, and we are expecting more people to join. So we'll let them join as and when they come by. Okay then. So the agenda of this webinar today is first we'll just take a look at what's going on in the Indian markets since the last time we met. Scott won't be here today, but since the last time we met, it's been quite eventful. We'll just review the market action and we'll see what's happened in the market and what do we make of it and how do we go about it. That's one part of it. Apart from that, we'll also look at how to actually use the MarketSmith app and how to create a routine out of it and how to really take advantage of the app. Apart from that, we'll also have a really quick brief about what exactly is this Canslim. And after that, maybe at the end, we can close with Q&A. So just before I get started, a gentle disclaimer here, this webinar is just for an education purpose. And so the disclaimer there. Yeah. Okay then. So the last time we met, it was December 15th, and it's been more than a month. And like I said, it's been pretty eventful. So the markets had the demonetization move was just announced, and the markets had corrected really sharply, and they were near their Brexit lows, and it went even much below the Brexit lows. And since then, the markets had like kind of had a small relief, and they had a relief rally, but they again corrected sharply to test those demonetization levels. And I think what's been the highlight of this since the last meet was that mid and small cap stocks have done really well and they have outperformed. So we'll come back to that. So this is the chart of Nifty, and if you see the last time we met, we were somewhere here, and the market was having a relief kind of a rally. This was the demonetization lows made by the market, and it broke this channel. It was trading in a channel. It broke this channel and corrected sharply. And actually on the Nifty, what did happen was the low of the demonetization was breached, and during the month we moved it to a correction. So we have a market analysis system. So it's fully rule based. It's not opinion based. So we let the market tell us what the market action is. We do not forecast, etc. And since the market had breached this low, we changed it to a correction. And since then, the markets could have gone either ways. It could have really corrected much more sharply. But surprisingly, the market just came about all its negativeness and it just bounced back really sharply. Okay, so this is the graph of Nifty. And what was really interesting was as the market was bouncing back from its demonetization, so around 8,000 there was a lot of resistance expected around this level, that was around 8,200. And what was interesting was how would the market really react around these levels. So what was surprising was that the market really took out all these resistance levels, and in spite of the fact that there were these 50 and its 200 days resistance levels. So just for a matter of fact, the blue color line here is the 50-day moving average, and the red color line here is the 200-day moving average. And very often indexes either find resistance or support from these levels. So it was really interesting to see what the market would do here. It had faced resistance. It had like kind of sold off, attempted to cross it previously and sold off, and was again around these levels. So there was a huge resistance area, and very surprisingly, market quite convincingly took out these areas. And so far, we as the research team from MarketSmith, we have retained the MarketSmith status to be in a rally attempt. We have not yet, we are here awaiting the follow through day. So what is a follow through day? So as per our research, we have found that a follow through day is a strong update in the market. The market needs to be up at least about 1.25 to 1.5% or maybe even higher. And what's important, this must come on high volumes, higher than at least higher than the previous day. So from our research, we have found that follow through days show strong signs of a trend reversal. So while this day was December 27th, and the market was up actually about 1.58% on the Nifty on above average volumes, but we did not consider that day as a follow through day because just the previous day the market had breached its demonetization low. So as a rule, we want to wait for at least 3 days once a market makes a new low because we want the market to cool down. So since this was just the day one, since the market made the low, so we were a little bit cautious there, and we thought that, okay, this may not be the right move to call it into a follow through day. That's what our research has also shown us. So we just held off the market. We didn't want to call it a confirm right away. And since then the market has gone up, though there were no major up days in the market. It's gone up about less than 1%. Once in a while, just about 1%. Mostly it has gone up about 0.5% each day. But what's surprising is it does indeed have moved up, and that is some cheers. That is some cheering news for us. And while actually a lot of investors have come to a consensus that yeah, the market is strong for sure, given this huge rise once it made these lows. But if you actually, and a lot of us are actually really waiting when is our follow through day going to come. But we just made a really interesting observation here that if you look at the Sensex, so this is the chart of the Sensex, this is the daily chart, and we did see a follow through day on the Sensex because the low of the demonetization level was not breached. And so this could have been considered a follow through day. but we actually wanted to be a little more cautious. We thought it's better to be safe, and we didn't consider it as a follow through day. But that did give like kind of a signal of a trend reversal in the market. That was something really interesting what we observed. And like I mentioned earlier, the mid and small cap stocks have done really phenomenally well, given the whole bearish sentiment regarding the demonetization which was hanging around the market. And since December 15th, the last time we met, the Nifty is up about 7%. I'm sorry, this is since December 26th. Both the Nifty and Sensex are about 6 to 7% up each, but the mid and small caps have more than doubled their gains over their large cap peers. So that's something really interesting. And another really interesting observation, what we did see was that we saw a follow through day in the Nifty small caps. And from our research, what we have found is that it's first the mid and small caps which begin a rally, and then the large caps actually pick up. So there could be some clues in the mid and small caps as per our research. And hopefully this rally will convert into a stronger rally when the big brothers, that is the Nifty and Sensex, also pick up. Okay, so now this is a very, really interesting quote by Bill. So like those of you who are new, so I would suggest that you go through the book written by William O'Neill, How to Make Money in Stocks. So the whole Canslim methodology is built around this book, and this whole investment philosophy is just based on that book. And so in the book, William O'Neill says that after daily general market averages, I would say the second most important indicator of primary changes in the stock market is simply watch the way leading stocks act. So if during this past 1 month, one month and 10 days, what's very interesting is leaders are showing strength. So what do we mean by leaders? So we mean leading stocks which have leading market share, which are selling leading products, etc. So all these stocks, some of these consumer stocks have really corrected due to demonetization, but they do have recovered and they are showing some bit of recovery, and that's a positive sign. What we see if we study the leaders, and this is really one observation what we made. If you look at stocks making new highs, so if you look at the week previous to the week before the last week, there were about 64 stocks which made new highs. So that was the week ended 13 January 2017. And if you look at the last week, which was the week ended January 20th, so the number of stocks which made new highs was about 254 stocks. So I don't think so we should dismiss this. This is a fact, and this whole system, Canslim system, is based on observation of facts, and we shouldn't dismiss this fact. And the fact is that number of stocks which have been making new highs has been on the rise. So this is up about 4 times in just 1 week. So that's surely a sign of confirmation, and that we see it as a sign of strength. And hopefully, we'll be able to see a follow through day sometime soon, and we should be able to get into a rally once post the follow through day. Okay, then. So let me move to the second part of today's webinar. So in the second part, we'll look at Canslim. I won't get into the whole details about Canslim, but what I'm going to do is I'm going to do a really quick overview and like a crash course on Canslim. So Canslim is a rule-based system. It is an investing system which is built to identify growth stocks, and there is a certain aspect of timing involved in this system. So we look at fundamentals of a stock and we screen stocks for growth. And what we also do is we also have technical analysis, and we use technical analysis in conjunction with fundamental analysis, and there is a certain timing aspect involved in this. So what is Canslim? So Canslim is an acronym, and the C in Canslim stands for current earnings. I'm going to take you through each of these parts of the acronym, but just to give you a quick snapshot, C stands for current earnings, the A stands for annual earnings, the N stands for new products, services, new management, new price high, maybe something new which is driving this growth for the stock. S stands for supply and demand. L stands for leader versus the laggard. And I stands for institutional sponsorship, and M for market condition. So what is C? So C, like I said, stands for current earnings. And through his research, William O'Neill found that all stocks which made big moves had certain common characteristics. And he observed that these seven characteristics were none other than these Canslim traits, what I just showed you on your screen. And among these, C stands for current earnings. So he observed that all growth stocks which made huge runs in the market had 20 to 25% quarterly EPS growth. So we look for stocks which are making about 20 to 25% quarterly net profit growth. And like currently, this is the result season. So we can see stocks, some stocks, they are affected by demonetization. Some stocks, they're really bucking the trend. Some they're reporting they continue to report fabulous numbers, so on and so forth. But essentially, what we look for is stocks which are showing at least 20 to 25% quarterly growth rate. So we look for a minimum of 2 quarters. And I would, to the people listening into the audio, I would suggest that if you're not talking, you should kindly mute your speakers because there's disturbance coming in. Yeah, I think it's either Rajiv or Rajesh. If you could mute your audio, then that would be really helpful. Oh yeah, okay, yeah, that's all. That's all. So also from our studies, we look for a minimum of 20 to 25%, but we like stocks which are more than that. And from our studies of model book stocks, which have generated phenomenal returns, we have seen that 70, on an average, they show about 70% quarterly growth. We also like acceleration in growth. So let's say a stock reports 20%, the next quarter it reports 40%, and the third quarter it reports much more than 40%, say 70%. So we like to see acceleration in growth. And what we have studied is huge price gains lie ahead when you observe stocks with such acceleration and growth. We also do give importance to what are the estimates ahead to see what's the potential the stock can further tap into. Rather than a fluke quarter, what we prefer is there should be annual growth in the sales and earnings to eliminate the chance of maybe a stock just reported a fluke quarter. So to weed out those kind of stocks, we look for a trend on an annual basis. So if on an annual basis you see stocks reporting growth of about 20 to 25% on a net profit level, so that's something very confirming. That's what Canslim looks for, and we like to see stocks which are in the top 20 percentile of the net profit universe. So that's what we mean by an EPS rating of 80 or higher. And from William O'Neill's study of stocks, he saw that all winning stocks had an average return on equity of 17%. So therefore, we look for stocks with at least 17% to the minimum. So that is A for you. And N in Canslim stands for a new product, new service, new management. There should be some new industry trend, maybe a new regulation, new price hike. Essentially, what's happening here is we like to pick stocks which are having some strong good or service which is selling like hotcakes, and they should be very popular, and maybe it's changing the way we totally live, like how iPhones have done it in the smartphone industry. So like maybe in an Indian context, if you see maybe something like Aisha Motors or Page Industries, that's changing the way people actually perceive bikes, how people perceive movements, etc. So there should be something new which is driving the growth for the stock. So that's what is N. Now, supply and demand. Essentially, if you see, price is finally a function of supply and demand, and we try to pick stocks which are having. We try to pick stocks which are having huge supply, huge demand, and this demand is captured by chart patterns. So essentially, there are about 4 types of chart patterns, and I'm sure if you read Bill's book, you'll understand that lots of people think that technical analysis, chart patterns, etc., is all mumbo jumbo, but there is actually a investor psychology why these chart patterns actually form. And using these chart patterns, using charts, you can actually strengthen a stock. You can spot demand for a stock, especially by institutions, And one of the key ways what we look for such strength, such demand is we look for above average volumes. So we prefer stocks which are trading when they break out of chart patterns on about 40 to 50% above average volume. I think someone's audio is on unmute. If you can mute your audio. Yeah. Yeah. So one way to assess demand for a stock is when a stock breaks out of a chart pattern, we want to see about 40 to 50% above average. So uh, what what we have noticed and what's very evident is that it's not the retail participation in the equity market which drives stock prices. Here it's the institutional participation. And very often, when let's say a mutual fund is trying to buy a stock, they tend to push up the volumes for the stock, and they go at least above 40 to 50%, and that's what we try to spot. So we're actually trying to assess what the smart money is actually doing using chart patterns and volumes. So in this whole Canslim system, we like leaders. So we prefer to pick leaders over laggards. We don't like stocks which are riding because of an industry trend, etc. We like to see stocks which are leading the market, which are eating up other companies, which are very competitive, which are eating up other companies' market share. So we look for both technical leaders as well as fundamental leaders. And like I said, again, we look for leading stocks. Their EPS and RS rating should be in the top 20 percentile. That is about 80 ratings. And what we have studied from our model book stocks is that big winners have come with ratings above 87. That is RS ratings and EPS ratings. So we like to see stocks which are making new highs with their RS line. So RS is nothing but relative strength. So what is relative strength? Relative strength is the stock leading the market or is it lagging the market? So that is what is. So if a stock goes up, if an index goes up by 1%, is the stock also going up or is the stock actually going down? So how is the stock moving with respect to the market? So that's what an RS indicates. And RS rating of 80 and above is actually healthy. That's what we look at. And if you see an RS line in a chart, so I'll try to show you a chart later on. And if you see a RS line breaking into new highs, so we'll see that as a sign of confirmation. And we like to pick such kind of stocks. And like I mentioned earlier, I'd like to reiterate the same point. It's the institutional demand which drives the huge runs in a stock. And we actually try to ride on the smart money. So a part of Canslim also looks at fund ownership in a stock. And we like to see the number of funds owning a stock should be going up quarter on a quarter basis. Also, we study the funds in the stock and we see, whether they should be top quality funds. Maybe they should be growth funds. There are different kinds of mutual funds, and we want to see quality mutual funds which are having a growth mandate to be owning the stock. So that's a confirming sign, and that's a confirming sign that okay, so institutions are piling up on the stock, and that's what drives stock price run-ups. Finally, last but not the least, we look for market direction. So this very simple statistic from us. That 3 out of 4 stocks trend along with the market. So if the market is going up, a whopping 75% of the stocks go along with the market. And similarly, if a market is actually in a correction, most of the stocks, that is 3 out of 4, 75% of the stocks are going to be along with the market and they're going to be trending downwards. So therefore, an important part of this investing system is we have to understand what is the current market direction. You have to know whether you're in the early stages of a bull market, or is it just an interim correction, or are we in a bear market, etc. So, and the whole idea is we want to get into the market when it's favorable to an investor. So we have this market analysis system, and of course that is quite comprehensive in itself. And I'm not going to be taking you through the details of the market analysis system. But essentially, what we look for is we look for an uptrend, we look for a trend reversal, what is known as a follow-through day, and we look for weakness in the market in terms of distribution days. Essentially, what a distribution day is a huge sell-off day. So that's what is the distribution day. So we count the number of distribution days to assess the weakness in the market. And therefore, we have these 4 major market cycles. Either the market is trending upwards, That is a confirmed uptrend or a rally, and this rally could come under pressure. That is when the number of distribution days in the market actually increase. So the uptrend is under pressure, and once the market starts correcting, so that is the downtrend. A market which is sliding. That's what we call as a downtrend or a correction. And once the slide stops, there are possibilities of a cool off. That's when it's a rally attempt. So these are the four major market cycles, and I'm sure as you familiarize yourself with the Canslim system and the market analysis system, you will get the details about the system. But for now, what's important is you need to necessarily understand which way the market is currently trending. That is very important. Otherwise, you're going to hurt yourself by trying to buy stocks when the market is actually trending downwards. That is very important. So this was like a really quick run through of Canslim, and I'm sure we do have a YouTube channel where we have lots of videos trying to take you through different aspects of Canslim. So I would urge you that you go through those too. But for the brevity and for the time of this webinar, we'll just proceed and we look at the sell rules what we follow. So once we essentially are buying stocks when they break out of a chart pattern, and there are times when a breakout may not work and it might fail. So what do you do in such a case? So from our research, we have found that the whole secret to making good returns in the stock market is to keep your losses small, and when your gains come, you should let your gains come in big. So therefore, we have a stop loss rule. We like to cut our losses. So that's our first sell rule. If you buy a stock out of which is breaking out of a base or a chart pattern, and if it fails, you need to cut your loss at about 8 to 10% from your buy price. And our second rule is 20 to 25% profit booking. A very natural question may come here that why 20 to 25% profit booking once a breakout happens. So from our research, what we have found is very often once a stock breaks out of a chart pattern, it rallies about 20 to 25% and it forms the next base. It forms the next chart pattern. So essentially a base is when a stock price is trending sideways. So once a stock goes up about 20 to 25%, it may not rally further, and therefore it might be ideal based on our analysis of data that maybe you should be booking your profits at about 20 to 25% level. And the third most primary sell rule, what we look at is if a stock is breaking below its 50 and its 200-day moving average line. So what we have found that is growth stocks which tend to rally very often find support from their 50 and their 200-day moving average lines. So if a stock is breaking below its 50 and its 200-day moving average lines, then there is something what you need to be watching out for in the stock. And therefore, okay, so just a minute here. I got a question here. So this is Rajiv asking to everyone. I'm sorry, I missed the question. So how do you know it's a distribution day? So that's a very good question, Rajiv. So essentially, distribution day is a high volume sell-off day. So by that, what we mean by that is we watch the market, and the market should not sell off more than 0.2% on high volume. So if a market sells off, let's say today the Nifty fell about 0.4% on high volume, so that's a sign of weakness, and possibly it's institutional selling captured by the high volume seller. So therefore, we track the market on a daily basis, and we see if the index falls by about 0.2% or higher, and if that fall is on a higher volume, and by higher volume, at least the volume should be higher than the previous day. So that means it is a distribution day. And from our research, what we have shown is that there is a high correlation between distribution days accumulating and the market likely to sell off. So I hope this solved your question, Rajiv. Yes, this PPT will be shared with you after the presentation. So that's not a that's really possible. But I hope my answer was addressed your distribution day definition. Okay. Okay. So we'll continue from the we'll take off in the presentation. So like I said, we look for booking profits about 20 to 25%. And however, there is an exception rule here. If a stock goes up over 20 to 25% in under 3 weeks, then we like to hold the stock for a minimum of 8 weeks. So what we have seen from our research is that there are some stocks which show extremely strong price action, and these stocks could be setting up a huge price move. So we call this as big winning stocks. So if you spot a big winning stock, that is a stock goes up about 20 to 25% post its breakout in under 3 weeks, then as a rule, we hold it for a minimum of 8 weeks. And what we have seen is the stocks tend to go much, much higher than 20 to 25%. So that's an exception to the profit booking rule. And like I had mentioned earlier, stocks do find support from their 50 and the 200-day moving average lines. And if you see a stock breaking below these support lines, then that's a concern for your stock, and you should be watching it closely. And you should especially be watching this if this happens on high volume. So that's another sell rule what we watch for. So these are the primary sell rules, and there are a few advanced sell rules. But since this most of us are trying to get ourselves familiar with Canslim, I'll stick to these primary sell rules. There are a few advanced sell rules we watch for, like a climax stop, so on and so forth. But for this beginning, since we are mostly looking at trying to get a basic overview of Canslim, these primary sell rules. So that's about the rule-based system what we actually follow. And now what's very important is that it is the screening process which actually helps you in generating ideas, and the strength of your screening process. If you have a solid screening process, you're setting up yourself for identifying good growth stocks. And with that, we'll move to the fourth part of our presentation, that is how to develop a really comprehensive routine plan, especially using the MarketSmith and the Canslim methodology to screen stocks and to build your watch list and to identify opportunities in the market. Okay, so first we'll begin with what not to do. So very often, I hear people buying off of tips and rumors, and like, my friends told me this stock's really good, I'm considering buying it, and so on and so forth. But it's very important that you do not trade off others' tips and rumors. You can hear about stocks from others, etc., but you need to confirm it for yourself. And Canslim is a very interesting and very proven system where you can actually confirm if your stock is a growth stock and when you should be entering or exiting it. And very often what we have seen is if you open up our MarketSmith India app and you see that our stock is having good ratings in the evaluation tab, maybe a master score of A, do not directly go and buy off the ratings. So what's important is that there's a certain timing element to it. So these are a few basic things what you should not be looking to do. And what you should be doing is you should have a system in place. That is, we simply cannot emphasize the importance of that, you having a disciplined system in place. So once you have a system in place, you're making sure that you don't become too greedy, you don't become too fearful. And with this system, you'll be able to keep most of your biases. It's the biases which determine how much profits or losses you make in the market. And once you have a system in place, you're making sure that these biases stay out of your investment decision making. And what's also important is that you do your own research. Like I said, do not trade off others' tips and rumors. And you confirm, if you like a stock, you should be able to confirm it using a nice proven system like Canslim. Okay, so what is the kind of routine you should be having in place so that you can identify opportunities in the market? Okay, like I mentioned, first and foremost is you should be looking at what exactly is the current market direction. So, like right now we are in a rally attempt phase. So the market has cooled off. We have the Sensex did show a strong trend reversal day, and the market has actually bounced back quite handsomely on that. But if it's a confirmed rally, what you'll see we are sure that another follow-through day will surely show itself up, and leading stocks will break out of the basis, and market they'll get into new highs, etc. So you should be very certain about what is the market trending sideways, is the market trending upwards, is the market correcting, is it a bear market, is it just an interim correction that you're not really worried about. But what is important is if you're going to buy a stock today, you should know which way the market is trending. So once you know which way the market is trending, you need to scan through different stock lists to generate your stock ideas. You should be able to evaluate them, and finally, you should be able to take action. So I'm going to take you through each of these steps, beginning with how checking the market direction. Now, regarding the market direction, what's very important is that you follow the market and not the news. So, this recent example of demonetization is a classic example when the news is, if you look at the news, it's only bearish. So you'll get a very bearish sentiment. Everybody is really concerned about the economy, what's going to happen to the demand and supply in the economy, and what's going to happen to stocks which are reporting their results, and everybody has an opinion, everybody has a view, and during the demonetization phase, it was very evident that there was an overwhelming negative sentiment overhang in the air. But if you actually look at the market did correct, but it did actually bounce off from there. So if you are smart enough and if you're looking at the market, not just the news, you would have got the trend reversal day, which happened on Sensex, and you would get back into the market, and you are actually playing smart there. You're not just being cautious because of the news being so bearish, etc. So what's important is you follow the market, because ultimately what's going to happen is all the news is going to reflect in the market, and therefore this, you need to understand the trend in the market, and we simply can't we can't emphasize the importance of the market direction. So like currently we're in a rally attempt. Okay, so how do you track the market? So we have made it really simple for you to track the market. So on the right hand side of your screen here is the MarketSmith India app, and right on the homepage you'll be able to see what is the market direction. Like currently the market is in a rally attempt, and you'll quickly see that okay, market is in a rally attempt, and we send out a weekly and a daily report to our users, and in the report we have a market pulse segment, so there you can see what is the current status of the market. So that's how you quickly understand, okay, so market direction is in a rally attempt. It's not it's essentially not very strong. Okay, so how do you generate stock ideas? So essentially, you need to be looking at stocks near the pivots. So what is a pivot? Pivot is a resistance area. So maybe the stock came near that area and sold off. So that's a resistance area, and you should watch it closely if it's able to take out that resistance area. Okay, I would request. I would request Mr. Balaguru to keep his audio on mute.
Has already sent in. Raghunath has already said.
Yeah. Okay. So you need to be looking at stocks which are near the pivots, and you need to be looking at stocks which are making new highs and having a good EPS rank. Stocks which are showing good RS ratings as well as EPS ratings. So in our report, what we send out, we do give a list of stocks, and which have a combination of technical as well as fundamental strength, which is captured by stocks making new highs as well as have a very good EPS rank. So that's looking at a fundamental aspect as well as a technical aspect. So once you scan through these lists, so these are like various lists what you get on our app and in our report. And IND47 is an algo generated list which is there on our app. So again, we look at about 10 proprietary criteria, and we generate the list of top 47 growth stocks which are showing strong fundamental and technical characteristics. These are the leaders of the market, and you need to scan through these IND47 lists, and you see, okay, I like this stock. This stock is setting up near its previous resistance level, and maybe I'll mark it as a favorite. And you need to watch it. You need to keep it in a watch list. We also have a report on stocks which are up on volume. This is there on the app as well as our PDF report what we send out. And apart from that, you should be able to develop your own custom screens on the app. You'll want to look at high ROI stocks which are making new highs. You can really customize, and you need to be essentially filtering stocks and scanning through them and looking for idea stocks which are approaching their pivot levels. And yeah, so this is the India 47 stocks where you can find it on our app. This is in the idea list page. And once you tap this top stocks India 47, you can go through the stocks list, and you can even tap this top stocks near buy point to quickly go through. Okay, so these are the top stocks, and these are certain 5 stocks which I like, and these are approaching their buy points. So I'm going to keep a watch on these 5 stocks. Similarly, you can this is the panel in the app where you can filter your own stocks. You can also look at stocks which are up on volume. Essentially, maybe institutions are trying to get into those stocks. That's what the up on volume screen actually captures. So once you find few stocks, you need to like kind of evaluate a stock. So let's say that a certain stock comes up and you like the stock. Under the evaluation page, we have different ratings, both technical as well as fundamental ratings, which you can quickly use to assess the condition of the stock. So this is the master score. Master score tells you a brief, quick hand takeaway review of how the stock is doing fundamentally as well as technically. This master score is based on these 4 ratings, which you can see down below. So this PPT will be shared, and so this is what essentially the different ratings of the stock, which you can see on the evaluation tab. So like I said, the master score, we look at both the fundamentals as well as technicals, and this master score is based on these remaining 4 ratings and rankings. The EPS strength, what we do is the whole universe of stocks, we rank them on a percentile basis, and we like stocks which are having a nice EPS rating of 80 plus. So it means it's in the top 20 percentile of the universe. On a price basis, we rank stocks based on the past 12 months price, and we give little more weight to the recency. And again, we rank stocks on a percentile basis. We like stocks which are 80 plus percentile, 80 plus ranking. Similarly, buyer demand talks, we look at accumulation, whether institutions are buying the stocks or whether institutions are trying to sell the stocks. Essentially, what we're looking for, if the stock is going up, is it going up on high volume? Or if it is going down, is it going down on high volume? So if it's going up on high volume, that means there is some accumulation which is happening. And again, we rank the stocks based on A to E. This is a letter ranking, and we prefer stocks which are having either an A, B, or C. And what's also important is there should be a strong industry trend in the stock. So that is captured by the group rank. So the group rank compares the 6-month price performance of the stocks industry group to that of the other 197 groups created by MarketSmith. So essentially, you know, okay, so my certain stock belongs to the sugar group, and the sugar groups are outperforming. There are 197 total groups in the market, and the sugar stocks are ranked 40 out of them. So that shows that, okay, essentially we look for stocks which are from the top 40 industry groups. So that's what the evaluation tab tells you about. It's a really quick hand way. You can understand, you can very easily assess what is the health of your stock on a both fundamental as well as a technical level. So let's say you pulled up a certain stock and you want to see how its peers are doing. You know, maybe the stock is a laggard. Maybe there is a stock from its industry group. Yeah, so maybe there is a certain peer stock which is actually leading the market, and maybe my stock in question is actually a laggard. So that if you just tap the related button, you can see top stocks in the same industry group which are having a high master score. Similarly, you can see stocks in the same industry group which are having a high RS. So quickly you can navigate to its peer stocks which are showing strength. So that's another way. And in the details section of the app, you can quickly understand. You know, I spoke about CNA in the Canslim, which is quarterly growth and annual growth. So using the details tab in the app, you can get the fundamental overview of the stock, and in that case, you can understand. Okay, so my sales and EPS is I'm seeing good growth rates for my certain stock, which I scanned from my stock list. So a certain stock from my stock list which I scanned may not be having the essential growth rates. So what do I do if the stock breaks out of its pivot? Now, from our research, what we have found is, you know, there are going to be stocks which are not having fundamental strength, but they're going to be breaking out. That is, they're good only technically, but they're not good fundamentally. Now, do you want to buy them? Can you buy them, and can you make money off them? You know, it's actually possible. You can actually maybe end up making good returns even on those stocks. But what we have found from our research is, you are going to be having a higher risk. These stocks tend to even correct, not just go up. So the probability of a failure from a breakout is higher in stocks which are not backed by fundamental conviction. So therefore, when you tap the details button, you can quickly assess the stock on a fundamental level as to, okay, my stock is pass on the C and an A, it's having good fundamental growth. I can quickly look at, okay, so my stock is having good return on equity of 21%, which is above my 70% criteria. And I can look at what's been the EPS trend on a long-term basis, so on and so forth. So once you evaluate the fundamental and technical strength of your stock, you do again need to look at this chart of a stock, and you need to understand whether the stock is the stock breaking down, or is it trending sideways? That is it forming a new base? Like if it's forming a new base, then what we recommend is maybe you shouldn't get into the stock right now. Maybe you should just wait. Maybe you should wait for it to take out its resistance level and then you get into the stock. And if your stock is approaching your buy point, that's when you should get alert, and that's when maybe you should start setting it higher into your checklist. Okay, so we have a question. Okay, so Mihir is asking, consolidated quarterly earnings need to be available in the software. Yes, sure, Mihir. I think that I'll communicate this and we'll try to get this on the app. Thanks for the feedback. Yeah, that's noted. We'll try to get the consolidated numbers. I'll check with the, I'll get back on this day. Thanks, Mihir. Okay, so you need to evaluate how's the stock setting up. You don't want to get, there are a lot of growth stocks which might be broken or which might be correcting. So we don't recommend buying into those stocks. So what we look for is a stock should be forming a base, and we want to get into the stock only if it's breaking out of the base. Okay, so okay, so Mihir says also for some stocks like Bharat Rasayan, September quarterly earnings are not updated. Okay, so that's also noted, Mihir. Thanks. We'll work with our data provider, and we are doing our best to make sure that everything is there on that. Yeah, thanks. Okay. So once you assess that, okay, my stock is probably near its buy point, that's when you should be sending it higher into your watch list. And the fourth and the final step in the MarketSmith routine is whether you add it to the watch list or you buy a stock. So if you like the stock, if it's a check on everything, but it's not really near its pivot, if it's forming a base, then maybe you should be adding it to your watch list. And otherwise, if a stock is breaking out of its base, that's when you should be buying the stock. And even if a stock breaks out of its base, we do not recommend buying a stock if it's extended. Extended means if it is more than 5 to 7% from its pivot point, that is its resistance point. And how do you add stocks to your checklist? So in the app, we have a feature where you can create your own list. So for example, this talks about budget 2017 list. I like to see, maybe this is a list I'm trying to see which are some stocks which could rally on budget. And I want to create a list of stocks which are from the sugar and the paper stocks, because I know that this sector is doing really good price performance. So I like to look at such stocks. I'll create a list out of them. And as a routine, at least on a weekly basis, you need to scan through this list and you need to watch the stocks. And I like to see stocks. I've put across certain stocks which I think could do well in 2017. They're showing top. They could be from the IND 47 list. They are. I could have. They're reporting some fantastic numbers, so I'm going to mark them in my list. And at least on a daily basis and on a weekly basis, you need to be going through this list, and you need to keep a watch on stocks which are approaching their pivot points. Okay, so Mihir says it would be great if the software could show on the charts what stage a stock is in. That is it in a first stage, uptrend, second stage, etc. Okay, so that's a good question, Mihir. I'm not sure if you actually know. So we do actually show which stage the stock is setting up in. So if you're looking at the app, if you press and hold the base area of a chart, you will get a notification. You will get a rollover area which talks about the pivot price, etc. So there you can actually see which stage the stock is. So that we are already actually providing that information. Let me know if you don't know where to find it in the app. So yeah, so it is actually available. I'll try to maybe show it. So this is the app, and this is the base the stock is forming. So if you press and hold this base area in the app, so you will get a pop-up telling what is the pivot price, what is the resistance area, what is the stage base, and little more details, how long is the stage. So all such details you will get it in the app if you press and hold the chart formation area. So I hope that answered the question. Okay, okay then. Okay, so that's more or less the routine what you should be following on a daily and a weekly basis to identify opportunities. Apart from that, the research team here we are looking at stocks, and we'll be adding stocks to the model portfolio to give you ideas and these along with the reports for each of the stocks. But on a personal level, if you, I would recommend that this PPT will be shared with you. You know, this is a pretty comprehensive checklist, and maybe I'll do some modification to this checklist and I'll send it across. So if you can keep this checklist near the area where you generally trade, that could be really helpful. You know, you can check your stock whether the stock is having a high composite rating, high EPS rating, whether it's having a ROE of 17% and more, whether it's in the top 40 to 50 industry group, whether the market is in an uptrend, etc. So this is a buying checklist what I've put together, and this is really useful. And in this way, you can develop a really strong screening process. And similarly, this is the selling checklist. When do you need to sell a stock, and what are the key selling signs? What you need to watch for in a stock, and these are a few advanced sell rules. Like we also look for climax stop, and we look for churning, etc. So I'm not going to be talking about those in today's webinar. But this is the selling checklist, and it'll be good if you can have this buying and selling checklist, what we look for near your trading the computers. And it'd be good if you can, if a stock qualifies all this checklist, then you're set to go. So that brings me to the end of today's presentation, today's webinar. But I think we do have a Q&A session. So if anybody has any questions regarding the methodology, regarding the app, etc., please feel free to shoot them, and we can discuss. Okay. No questions? Okay, so there we go. We get a question. What about the iOS app? Yeah, so the iOS app is work in progress, and I think you can expect it sometime soon. Unfortunately, I don't have the exact date, but I can check with my product manager and tell him to get back to you when exactly is the iOS app out to release. But I know that the IT team is working really hard on that. It should be out sometime really soon. It's in the testing phase. And we'll also be coming out with a web tool version. So, okay, so Brian is asking if can I pick up a random stock and do the cup handle analysis yourself? Sure, Brian. You know, one way I actually look at stocks is I look at Google Finance, and in the Google News section, business section, I generally, if I see some stock which is trending, so that I go up, I pull up the chart for the stock, and I see what's the stock doing, and I see whether it's setting up well, it's having a good technical strength. And once I see that okay, there could be something in the stock, then I go back, I dig into the fundamentals, then I see if it's having my growth what I want for. So I think that's totally fine. You know, if you can pull up a stock what you like and do a cup with an analysis, whether the stock is forming a base or whether it's breaking out, that's totally fine. That's, I do that sometimes myself, and I do find stocks even in that way. That's totally fine. That's a go ahead. Yes, yes, all you can pull up any stock from the universe, and you'll be able to quickly assess whether the stock is forming a base or not. All the stocks are available in the app. Okay, so Mihir is asking, where do you check the fundamentals and screen based on fundamentals? Mm. So, and how to find institutional participants in a particular stock? Can we have a monthly report of mutual funds in which Canslim stocks they are entering? Okay, so what I would recommend is in the Filter India stocks, you do have stocks where you can screen by EPS rating. So essentially, that's a fundamental screen what we have put for. So I think if you get the report, there is a list what we update every week, stocks with high EPS and which are making new highs. So that's a really good, nice place to find ideas. So if you scan through that list, I found many good ideas on a personal level myself there. So that's a nice place for fundamentals. You can filter stocks based on different EPS ratings. And how do you find institutional participation in the stock? So if you again look for up for volume list, you can possibly get clues of institutional participation. Also, I would like to screen stocks with accumulation distribution rating, that is the buyer demand. So you can see possibilities of institutions picking up the stock. You can use that to screen stocks for institutional interest. Can we have a monthly report of mutual funds in which Canslim stocks they are entering? Okay, Mihir, I'll get back to you on that. I'll see if we can do that. And if one wants to drill deeper into the fundamentals of a particular stock, is money control a good source or any other reliable good option that you guys see? Yes, I think money control is a good source. Apart from that, Yahoo Finance also, I do like Screener also, but those are public sources. I think they're all good. A Screener is a good place I like. Screener.in. Yes. Yeah. Okay, so rating in the details tab. What specifically regarding that? Oh, can you please explain the earning stability rating in the details tab? Beautiful. So basically, earning stability is how if the stock reports its earnings in a very volatile fashion, like one quarter it's up, growing 30%, next quarter it's down 20%. So that's the earning stability is likely to be lesser. But if a stock is a little more consistent, then its earning stability is likely to be higher. So if you pull up a stock such as an ITC or a HUL, these are more or less stable earnings, so they'll have a strong stability. The lower the better. So if you see earning stability of 1, that means the stock is pretty consistent when it reports its earnings. Okay, Praveen is asking, could you show dates on which stocks was added or removed from IND 47 in the recently added and the recently removed section? Okay, Praveen, I'll take that as a feedback and I'll get back to you on that. Any other questions? Okay, guys, any other questions? We'll call it an end if no other questions. Okay, then. So thank you everybody for coming to this webinar, and also I think this would be a good time to check. The last time Scott had to cancel this because we fell short on attendance, and we should really use this forum. We can discuss stocks, and we can take each other's. This is also even this forum can be considered as a place for idea generation. We can use this forum to help ourselves understand Canslim better, and we're all in the learning curve, and we can really take advantage of this forum for that. And probably I should ask if you guys can ping me in the chat what time is actually convenient for you guys. Then we'll take that. We'll try to work around the most convenient time. Okay, so maybe if a stock goes, let's say, from small profit in previous quarter to huge profit in this quarter, and is forming a good chart pattern, should it be considered, or do we need at least 3 to 4 quarters of high EPS growth? So Mihir, what I would say is, if a stock is having a confirmed average 3 to 4 quarters of high EPS growth, then that's an ideal case. But if a stock is showing sudden jump in its profits from reporting poor profits earlier, then surely there could be two reasons here. One is there is something which is there's something exciting which could be happening here, and that gives us a reason for us to investigate a little more as to whether this is sustainable, whether this could be expected going forward. The second thing, what could be happening is this could be maybe a fluke quarter. So maybe the stock just randomly reported a huge EPS growth, but maybe this is not going to sustain. So I would dig deeper into if this is sustainable, then surely I wouldn't mind trying to get into the stock on a personal basis. But essentially, what we look for in Canslim is the most ideal stocks, and essentially an ideal Canslim stock is it removes all elements of risk. So I would say that when you look at stocks which are not having a confirmed trend of EPS growth, there's a slightly risk element involved here. But if you dig deeper in and from your research you find out that maybe this trend is likely to continue and maybe there's going to be an acceleration from here, I would say why not? I would surely consider the stock. On a personal level, I would go ahead with that. Okay, so he also just wanted to share Quest Corp has again come to his buy point, and today at the closing there was a good buying scene. Yeah, I think the stock reported its numbers, and I think the stock's numbers were quite handsome. So I think hopefully the stock could show some good price action too in the coming few sessions regarding Quest Corp trading near its buy point. Yep, it is likely actionable now. Yes. Okay. So PI Industries. So also, if you could tell us what you really liked about PI Industries, whether it was the technical strength or there's some strong numbers. Also, since this is the earnings season, what William O'Neill has observed is you shouldn't be getting into stocks when their earnings are reporting maybe a week ahead. So what happens is sometimes stocks tend to miss, and that's a little risky situation. You don't want to get caught up there. So if a stock is reporting its earnings in the coming week, then it's good to maybe just hold back a little, wait for the stock's earnings to come out, and once that is through, then maybe you can consider getting into the stock. Okay, so PI Industries is having a great price setup. Yeah, that's great. Yeah, the stock has been doing well. I think it's had a good 2016 too. So hopefully. Yes. So, like I said, we should really take advantage of this forum, and we should be able to learn from each other, especially regarding Canslim. We'll be able to understand how to actually identify a Canslim stock, how to view it from the Canslim lens. And I would suggest that if you all could ping in the most convenient times for you all to have this meetup, then we would take that as a feedback and we'll try to build around a time. We'll try to build around this session around that. Yep. So PI Industries has great EPS growth and growing market share. Okay. Okay. So Brian says 7. Okay. Praveen says 9 p.m. So I understand that it's going to be different for different people, but what we can surely try to do is we can try to make it work for most of us. So that would be the most convenient way to go about it. Few of us might have to adjust a little bit beside that side. Okay, Rajiv says 3:30. Mihir says after 8. Okay, and do you guys prefer it on a Saturday or a Sunday? Any preferences there? Or maybe a weekday itself, because some people are not convenient with Saturday, Sunday. Some people are not okay with weekday. Okay, so Rajiv says he doesn't prefer weekend. Okay, Praveen says weekday after 8. Saturday, is convenient to me. Okay, so we will take this as feedback and we'll try to come around with a time which is most convenient to most of us. So obviously there are going to be some people who are have to maybe adjust a little bit. But what's important is that we make the most of this forum and we take advantage of it, and hopefully we all stand to gain out of it. Okay, so thank you everybody for this. And with this, I'd draw this session to a close. And we look forward to meeting you guys in the next session. And hopefully, we'll be able to see some good market action till the next session. Thank you, everybody. I hope this was useful. Thanks. Oh, sure.